None, Paul. That's all. Welcome to Question Everything again for the second time. Man, the greater university people are going to learn today.
Oh, absolutely.
Everything that they thought was true about insurance, everything they didn't know about insurance. And we're going to have people popping in to ask us questions live. I see you've been sending out and this is not your fault. We want them to stream and ask the questions on YouTube, but I see them in backstage. So I don't know if we want to bring them on the show or we want them to ask the questions. Like, do we want them to ask questions and come in live and let's talk about it, or do we?
Well, if you want to, we could. If some people may be camera shy, so we can give them an opportunity to send you the message because I can't see it, or they can come on and ask the question, and then we'll answer it for everybody. So you can bring them on to ask the question so I can fully understand it, and then I'll break it down. It's up to you.
Let me send you the link to send them so that we can get the questions on YouTube.
Okay, this is different.
Yeah, it's my bad. I didn't know. Yeah, it's like with Zoom. There's different ways to do it, but you know what? This is what happens when you go live. Things happen live.
Go live when it go live in live, right? Freedom Friday, baby. Freedom Friday.
We are on Telegram, right? I'll put it in our chat. Let's see. Thank you everyone for tuning in. Where we at? Paul. Paul. There we go. All right. Let's see.
Somebody said send me the YouTube one, please. They already said
yeah, they're like, we don't want to be backstage.
Right. Okay.
Yeah. So we got Shayara. Oh, that's Shay.
Yeah, Shayara.
Elios and Glenn. Yeah.
Okay.
We don't want them hanging out backstage where they can't hear us.
Okay, we want them to hear us. Okay.
So listen, I'm going to start us off while we're waiting and everybody's waiting for this to get situated. I got one question that's been kind of not burning, but I asked a bunch of people, like, did they feel like school prepared them for real life? And the thing they said was no, right?
Right.
I thought it was just Gen Z, but then I thought back to myself. It's like, no, I had to unlearn everything I learned in school, the way to learn, why we learn, like all of that stuff that they crammed in our heads so that we can memorize it and regurgitate it.
Right.
Just so I could learn how life actually works. And so I started by asking Gen Z this question and reflect.
Now break down what Gen Z is. I mean, I know Generation Z, like what's that? Like what age group is that?
That's a really good question. I want to say it's like, they're 20, like 2000s. If you're born in the 2000s.
Oh, okay. Yeah, I don't qualify for that for sure.
Up until like 2020, maybe. I don't know. I'm not sure how the generations work, but I know I'm a millennial, a geriatric millennial, as I've learned. But our kids, basically. My wife said our kids. Basically, the overarching question next was, what do you feel would have been the best thing you could have learned to prepare you for the world? And the overwhelming response was money. Teach me money.
I knew that was coming.
Teach me how to make it, how to spend it, how to manage it. Good evening, Kathy. It's great to see you. So we'll start with that question, Paul. Like, I know you're a financial advisor. You're my financial advisor, guys. This is the person that's going to teach me how to undo all the bad financial decisions I've made in the last 5 years. And let's just start with that. Why do you think finances are so hard for people?
Okay. Well, that's a great question. Why do I feel that finances are so hard for people? Well, I can speak from my personal experiences. Money in our household, the Franks household, or the Ball, Harry Ball, my mom. I was raised by my mom and 3 sisters. So when money would come up, I'm the youngest. I was always told, Junior, go in the other room. we're about to have grown folks conversations. So I didn't learn from home, and I kind of learned from that school that kind of round with box. I learned from the school of hard knocks. I had to find out the hard way. So a lot of people, when it comes to money, it's embarrassing to tell people you don't know. And then it's also scary if you ask for help because somebody may take advantage of you. And most will. And so I go by what the Bible says. The Bible says, in all you're getting, get understanding. And I actually remember one of my mentors said that the Bible actually has more scriptures about financial stewardship than heaven and hell combined times 2. I said, man, I know that's a lie. Ain't no way God gonna be talking about money more than heaven and hell. I know heaven and hell is way more important. And then so I questioned that. And so why is money so important? So the number one day of the week that people have their first major heart attack and die, guess what day that is? And it ain't Friday, because everybody gets excited about Friday. Nobody says, thank God it's what day you think?
Monday.
Bingo. Between the hours of 6 a.m. and 9 a.m., massive heart attack, pass away. And the number one reason, one of the number one causes of heart attack is stress. And I'm going to start off like this. Since you look at this word, I'm going to give you a little hint. Stress. What do you think the number one thing people stress about? I'm going to put some lines here to help you out.
No, he's not dropping hints at all.
Right. Triple bypass surgery, stress. So people are stressing out. My mom died of a massive heart attack in 2011. Wow. My father died. They found him hanging from a tree with a garden hose. My dad's house got foreclosed on. My mother's house got foreclosed after she passed away because we didn't have the funds to cover it, even though my mother been paying for insurance for over 30 years, and we can talk about that later. So the main reason people struggle with money, because that conversation is not had at the kitchen table.
No.
And the reason it's not had at the kitchen table, because more than likely, my mom couldn't teach me she couldn't teach me what she didn't know. And my mother had 2 master's degrees. My father had a bachelor's degree. They were far from ignorant, but when it came to finances, they were financially illiterate when it came to certain things like mutual funds, insurance, what type to buy. It was kind of like, hey, Junior, just get some insurance, get some investments. Where? I don't know, just figure it out. And that's a dangerous thing. That's when people go to payday loans or, car loan. You buy your car, they give you $500 and you lose your car because you don't know how it works. Going to college, getting a credit card, and you all thinking it's free money, then you realize you got to pay it back, get student loans, triple, 6 figures in debt, and you realize, hey, man, I don't even have a job to pay it back, but you still got to pay it. So it's very intimidating when you don't understand something. You always fear what you don't know or don't understand.
Absolutely.
So that's why I would say and I'll look at this right here. The Bible says our people perish for the lack of what?
Knowledge. Okay,
so we got 2 words. We got know and we have ledge. And if you don't know, Greg, you won't have a ledge to stand on. That's the biggest thing. So what I do, I teach you Ecclesiastes 10:19. It says, feast is made for laughter, wine is made to be merry, turn up, but money answers all things. Everything we need is in the book, the number one sold book in the world, the Bible. It's all there. And so just to go back to it, I was wondering, why does God talk about money? After I found out it was 2 times more scriptures about money than heaven and hell combined, I was like, God, why? He took me to Matthew, where it says the greatest commandment is to love the Lord your God with all your heart, soul, and mind. And he said the second commandment is like it, to love your neighbor. Love your neighbor as you love yourself. So love the Lord your God with all your heart. It started there. I'm like, okay, I don't get it. He said, let's go over here. It said Proverbs 3:5. He said, trust in the Lord with all your heart. I say, so the greatest commandment to love the Lord your God with all your heart. Do you think he said heart first by accident, or was it on purpose?
Oh, it's always on purpose.
Okay, then Proverbs 3:5 says, trust in the Lord with all your
heart,
and do not lean unto your own understanding, but in all your ways to acknowledge him. And I said, okay, I'm still not getting what this got to do with you talking about money. And then God showed me in the Bible where it says, where your treasure is, your heart will be. And that's why. So that's why God wants us to, when we pay tithes, give it to him first, because whoever you pay your tithe to, whoever you either going to love money. God said there's only 2 masters in this world. You have mammon or money, and you have God. He said you cannot love both. And this is one of the biggest reasons people get offended at church, because you're touching their God. You want to make somebody mad? Touch their money. And when you think that you own this, and you think you own this, and you don't have to serve this, that's when you get lost. we actually are what's the word? Not a servant. We don't serve. We're not supposed to. A lot of us, we serve money, and God is an option. But the real deal is this, Greg. We're stewards. We don't own it. And how do you know that? When I die, I'm gonna bring the same amount of money with me when I leave as much as I brought in when I came here, which is absolutely what?
Zero.
Right.
Absolutely nothing.
So that's just the philosophy behind it. When you think you're an owner and not a steward, it can put you in a very strong, very, very bad place, because you can't take no house with you. Even when I pass away, my wife, WIFE, you might hear a couple acronyms today. Why I'm favored every day. I can't even take my wife with me. There's no marriages in heaven. So when I pass away, some other dude's gonna have a hard time to try to make up from what I used to do, right? But there's more to life than just what we see here.
What was that acronym again for wife? I like that.
Okay, wife. The Bible says a man that finds a wife finds a good thing and obtains favor from the Lord. So when I see my wife, my ring, it says why I'm favored every day. When I fight for my goals, why I fight every day. I fight for my wife. She's a gift. She is not mine. She's a gift from God. The Bible says houses come from houses, and money comes from fathers, but a righteous woman, a godly woman, is a gift from God.
Man, I was just reading that in Proverbs about that. I love that. Wife, I'm favored every day. Yes, absolutely.
And I like to call it proverbs. We're going to be doing a lot of wordplay here. We got proverbs. You look at the word proverbs, it's two words. You got pro and verbs. Pro stands for professional. Verb stands for action words. There's 31 days in the largest month of the year. There's 31 proverbs. So read a proverb a day. Keep the devil away.
Come on, man.
So professional, pro stands for pro. Verb stands for action. Proverbs or proverbs. Proverbs is professional action words for the believer.
Wow.
Hope that's good.
Paul is full of these acronyms. I love it. So when Shay was still in the back room, she had put in the private chat that she's embarrassed to help someone ask with her taxes. She didn't know to even approach a tax preparer. So let's talk taxes for a minute. Like, why are taxes so overwhelming? I know it's about to be tax season. People are getting their W-2s.
Yeah, it's already tax season. Tax season is upon us. It's like,
you know what? It's already February. Yes, it's about to be what it would have been like December. So yes, they're about to get their tax returns. They're gonna splurge. They're gonna buy things. They're gonna put all of that money in one place and then be broke for the rest of the year. Right.
In about 90 days, whatever car they bought is probably gonna get repoed in 90 to 100 days. Whatever car they bought with that is gonna be gone. It happens all the time. It's the American scheme, not the dream, but the American scheme. Buy more than what you can afford. Buy now, pay later, and then it's like candy. Like, you ever heard of the now later candy? Y'all remember that candy?
Oh yeah.
Yeah, you got now. And you got what later? And the problem is, when you pay later, you always gonna pay more.
Yeah.
So you buy a $30,000 car because your credit so shot up, you're gonna pay $80,000 for it.
Oh yeah. And we're not even mentioning opportunity cost.
No, we're not. And then time costs. The time you have to spend at your job to go pay for this depreciating assets. So one of the biggest problems people have, they like to invest in what we call WRLs. Something I was really good at young in my career.
Wealth reducing liabilities, huh?
Yeah, you're supposed to ask me what it is, but great.
What? My bad. What's WRL, Paul?
Man, I'm so glad you asked, Greg. Wealth reducing liabilities. For example, when you buy a car and you're not using it like for Uber, using it to make money, if you're buying a $100,000 car that doesn't make any money, that $100,000 car when you first bought it depreciates. So as soon as you sign a name on it, it has owners. Now it's pre-owned. So $100,000 car is now maybe worth $85,000. And every year that you drive it and every mile that you put on it, the asset continues to lose money. If you look at the word assets, we're gonna put a line in there too. So you look at your assets. Your asset basically tells you where your assets set, basically, right? Asset set. You play on words, right? So you got to be careful that you're not investing. You want to invest in what we call IPAs. Income.
Ooh. What's the IPA?
Oh, it's not beer, right? I know you know it. Income producing assets. Okay, and we're gonna put a line in there too. I don't know if you can see the income producing assets. So whatever you're buying, does it make you money, or does it make you money, or is it costing you money? So buying a house, a lot of people say, "Oh man, my house is an asset." If it's not making you money, not really. But if you have a house and you're renting it out, like my wife and I, it's making you money because you're renting out houses. So, you know, if you got $1 million house, that's an asset that's really, you know, the water heater break down, the yard got to get cut. It's taking money from you. Yes, it's an asset you can sell, but if you're just living there, it's not making you any money unless you're using the equity in the house to go buy another house or something like that.
Man, and
some people don't want to share the house. Like some people will have a big house. Like my mom had a 7-bedroom house. 6-bedroom house, five bathrooms and a pool in the backyard, just her and her boyfriend or whatever. And it stressed her out to death, literally. Like she struggled to pay for it to look good, and she could have rented out some rooms and had helped her out on the mortgage. You know, there's some things that people do, but in our culture, we ain't doing that. But other cultures have done that for years, and we made fun of them. Eight families get out of one car, but they paid it off. 8 families staying in one house, but they pay it off. And now we're renting from them.
You know, it's funny you mentioned that. I watched it happen. A friend of mine lived down the street in Fort Worth, and she said that this one particular culture kept buying houses out on the block. And so they had like 10 of them living in one house. Right. And then they all put all their money towards that house.
Right.
Use the equity to buy a house next door. I'm assuming. I don't know how they did this. Right. But like when I used to work at Walmart, I would see certain cultures of people come in and they only had cash and they only shopped on one day, and they all came in and they pooled their money to get all their groceries together. Right. They all lived in the same house until that one was paid off. Then they bought the next one. I mean, eventually they buy the whole block. Why can't we do that as Americans? Because it's all about independence. It's all about looking good for people. Like buying things we don't need with money we don't have to impress people we don't even really like.
Right.
I don't get it.
And independence is good if you talk about financial independence. But what we normally do back in the day when our ancestors were owned as slaves, they would get branded with a name and basically say they own you. We fought for freedom so we wouldn't be branded anymore. Once we got our freedom, we got some money of our own. We fought to put brands on us now. So if you walk around with some Jordans that are fake, people will laugh at, there's some fake Jordan. You're fighting to have Michael Jordan name on you to make you feel like you're real. Oh, those are fake red bottle. Oh, they're fake this. And people make fun of you when you don't spend big money on somebody else's name to be on your back. Same thing. Brands are just totally different. So how they keep you in chains now is in debt. The Bible says a borrower is a slave to the lender.
Yeah. So I got a question that just came through from Shay. Hey, Shay, good to see you, girl. So how much would you recommend that a person invests once they get their taxes? That's a really good question.
That's a really great question. I think that Shy Sanders there. Okay. How much should a person...
Shy, my bad.
Okay, that's okay, Shy. But Shy, how much a person should invest when they get their taxes all depends on that person. I don't believe there's a one size fits all, even though they got a one size fits all hat. My head is bigger than normal. My hat don't fit in those. So how much a person should invest should depend on what their goals are. And with our company, we do a thing called GPS. You know, when you're driving somewhere, what's the purpose of using a GPS? And I don't know if Shy can respond. When you use a GPS, we know this is a global positioning system where it helps you. What's the whole goal of GPS? Is to save you what?
Time.
Yep, time. And what? Can you see
Trouble?
That? Money.
Yeah.
Money. Dollar sign. It's time and money. The whole purpose of a GPS is to help you get where you need to go and save time and money and getting it. Otherwise, what a lot of people do, and this is why a lot of people struggle financially. Hey, I'm trying to find this store. Where is that at? Have you ever pulled over to ask somebody for some directions and they confidently, with passion, gave you directions? And then you go that way, and a while you pull over and go to gas, and they say, "No, man, it's the way other direction." Has that ever happened to you where you got directions from somebody and they gave you confident and you just knew you was heading there? Oh, it's 5 minutes of road, 30 minutes of road, and it's wrong.
Back in the day, before we had MapQuest, before we had Google and Apple Maps, yes, absolutely.
Right, but you know, the young generation, I guess Gen Z don't know nothing about that. So what happens is GPS. So you need to sit down with a financial advisor, and you probably think, "Oh, that's too expensive." Wait till you figure out how much it costs when you don't have one. Every wealthy person has a financial advisor. So if you want to get your hair done, if you're having struggle with your hair, like I don't have hair like you, so if I want to get my hair done, I pay someone who knows how to handle hair to fix my hair. If I have a marriage problem and I want it fixed, you know, unfortunately people don't do this, I'll pay someone who's good at helping marriages to fix my marriage. See, what you care about, what you love, you'll spend money on.
Yeah.
That's why God said you can't love money or you can't love God, because you're either going to love one and hate the other. So if you want to figure out how to invest your taxes, you need to invest in somebody who has that would put your interests at best. So GPS stands for goals, priorities, survey. Now they may not call it that. I can't tell you how much to invest because I don't know what your liabilities are. Because let's say, for example, let's say Shy, let's just say Shy is like 30 years old and she has 5 kids. And please don't take me wrong, I don't know her. So she got 5 kids, right? And she owes, let's say, $200,000 on her house. She has, $45,000 owed on her car. And she has 5 kids, all under the age of 15 and under. She has no money saved for college for her kids. And they're not like about to get a scholarship. They're not athletes. And then she's asked how much to invest. The first question I'm going to ask is, who's helping you take care of these 5 kids? She said, I'm a single parent. I'm a single mother, divorced mother. Okay. So my question would say, okay, if you got, let's say you got $5,000 and you take this $5,000 shot and you go invest it in the market and you die tomorrow. Who's going to take care of these 5 kids? Can that 5,000 cover that?
Mm-mm.
Now, if somebody would just focus on making money, oh yeah, take that $5,000 and go invest in it of A, B, or C. But can that A, B, or C take care of the 5 kids when you're no longer here? Would it?
No.
Now, if she tells me, oh yeah, Paul, I got $1 million in the savings, my mortgage is paid off, and I got a business that's going to pay my family $20,000 a month, no matter what. Okay, maybe we can take some money and invest in. But if she tells me I have no money in the bank, I maybe got $1,000 in the bank. I got my mortgage is like $1,500 a month. And then I'll say, hey, Shy, Miss Sanders, if you passed away today, how long with the money you have in your savings and retirement would maintain the house that you're in, the car that you're driving, and fund your kids' college? And most people's answer is 1 to 3 months or less or 0.
You're right.
So if her answer is, I don't have more than 6 months of living expenses saved up, you need life insurance first. Because a lot of people confuse insurance as an investment. Insurance is not an investment. Insurance protects the investment. Like a person that has a car, right? I know it's probably an ugly car. They just call it a BMW. They may charge you $500 plus a month, depending on your credit, whatever, to protect that car. Which one's the investment? Is it the car insurance or is it the car?
The car.
Bingo. So you're putting insurance to protect your investment. Why? Because if you blow this car up, you want another car. So When you buy life insurance, this is what you have to understand. Life, the person. And if you're making $100K a year or less or more, if you're making $100K a year, every 10 years, that's $1 million your family's going to lose forever. Because most people, if they progress in life, they make more money. So life insurance is supposed to protect the investment. And guess what the investment is? The life. And you look at the life, you got the if in there. When the if in life is going to happen. And so it's not if you die, it's when you die. So if you die before you get the assets up to $500,000 or $1 million, and before you become debt free, you need enough insurance to cover your number one dime. Shire. So if I'm sitting down with you, and you're saying, I said Shire, and you're saying, hey, how much do I need to invest? First thing I'm gonna ask you, the D and dime. Before we look at that, how much debt do you have? She may say, I owe $45,000 on the car. Okay. How much income would it take? You got 5 kids. How much income would it cost if you passed away? Who would get your 5 kids? I don't know. Okay. Would your kids have to set up a GoFundMe?
Wow.
Oh, I wouldn't want them to do that. Well, I would hope you wouldn't. So I think you should set up a You Fund Them. So you need to set up an account called a You Fund Them. So in case you die tonight, your kids will have enough money to pay off all debts that if you don't pay it, they can't go take the car. How much income would a person need to take care of your 5 kids? You know your kids better than anybody, Shot. And these are your imaginary kids. I don't know if you got 5 kids or not, but if you got 5 kids, think about how much it costs for you to raise your 5 kids the way you raise them. How much would it cost for me to take over your 5 kids without having to touch my bank account? And you may say $1,000 a kid, $500 a kid. So if it's $500 a kid, 500 times 5, that's $2,500 a month times 12. What's that? I believe that's $30,000 a year. So if I need to take care of your youngest child until they're 10 years older, that's $30,000 a month times 10. That's $300K just to cover the income. That's if the cost of living don't go up every year.
And it does.
And it does. And there's a virus that you have to worry about. And I'm not talking about COVID. Do y'all know how to get away from the coronavirus? Are you familiar with the coronavirus?
What's the coronavirus?
The coronavirus is something that affects everybody, whether you're black, male, female, educated, uneducated. It's called the cost of living increase. Back in the day when I was young, I used to better go in the store. My mom would give me $1, right? And this is how she taught me taxes. This is how I learned about taxes. I said, Mom, I need $1 before I'm gonna buy a bag of chips. It was for 99 cents. I was able to get 4 bags of chips for $1. Like for real, like the real bags of chips, no little small bags. And then I gave them $1, and they would say, "Hey, we need 8 cents." I'm like, "For what?" "For taxes." "Who's that?" "For Uncle Sam." "I ain't got no uncle named Sam." So I had to go back to the car. I said, "Mom, they want 8 cents. They trying to cheat me. They said it's 90. It said 4 for 99 cents. They want to. They told me I got to give them 8 cents more. I know how to count." I said, "No, baby, you got to pay the taxes." She gave me a dime. Boom. So I know it's like $1.08 to get taxes. That's how I learned taxes. Part of it. So to answer the question, the next question is, hey, Shy, are you renting or owning the home you're in right now? And if she says she's renting, I'm gonna say, hey, Shy, if you were to pass away tonight, would you want your kids to have to pay rent or would you want them to have a house? And she may say, shoot, ain't nobody got me nothing, so they're gonna have to figure it out. Okay, fine, we can leave that alone. She said, nah, I don't want my kids to have to pay rent. I would like them to buy a house. Okay, how much would it cost to buy the house you would want for your 5 kids? Now let's say she say $400,000. We'll put that here. And then I'll say, hey, listen, you got 5 kids. They're all under the age of 15. Would you want those kids to better go to college completely debt-free? Or would you want them to have to fend for themselves and get a student loan, which is the number 2 debt in the world? They said, no, I want each kid to better go to college. Well, you got 5 kids, 50 grand a piece. So you're going to need at least 250,000 for that. So we add this up here. We got 300,000, 400,000. That's 700 plus the 250. That puts it at 950. So roughly it's approximately $1 million.
In insurance.
Right, in insurance. So what I would tell her, I say, hey, listen, before we get into what we're going to invest in, we're going to invest in you first. We're going to protect the number 1 asset you have. And what the number 1 asset that most people have is our ability to earn income. So if Shire makes 100,000, I'm going to say, Shire, just to be a rule of thumb, you need to have 10 times your annual salary. So if she's making 100 grand, you should have no less than $1 million. Nipsey Hussle, before he passed, he said, I got $1 million on your flesh. I got over $2 million on my flesh, and I don't make nowhere near as much money as he did. So if you're making 100 grand a year, you should have no less than $1 million. If you're making 200 grand, you should have no less than $2 million of insurance. What type of insurance? We'll talk about that in a minute. But I would tell her, before you talk about investing in a future, you need to take care of the now. Because when can we die, Greg?
Today.
Right. So when should we plan for it?
Yesterday.
Yeah. Like yesterday. So what I would tell her, if you got $5,000 to invest, let's put $100 to $300 what we need to cover you. So in the event that you die now and not later, your family get at least $1 million. So if you die today, they got enough money to pay off the car, have enough money funded so your children won't be a financial burden on somebody else. Because when we pass away, we leave kids that can't take care of themselves. We're either going to leave our children as a financial blessing to somebody else, or they're going to be a financial what?
Burden.
Which means AKA GoFundMe. Make sense?
Yeah.
All right.
So let's go over the dime again. So that's debt.
Yes, sir. Debt. I stands for income. So the question is, if you're married, or if you're not married, you got a live-in girlfriend, live-in boyfriend, they're helping you take care of the kids. How much would your mother of your child, the father of your child, need? Because if you're working together, you're living together, y'all are both contributing to the household. How much money would your spouse or significant other need to keep the household just as is? Because when I pass away, my wife is either going to my wife would have to sell the houses that she has if the people that are rent from us didn't pay. That's why I have over $2 million worth of life insurance, because I want her to have the option to pay off all houses, cars, and everything, and still have $1 million in cash after she's debt free. Those are my goals. That's my goal priority survey. It's a priority that when I pass away, my wife will never have to work another day of her life. My goal is also to get it at before I pass away. But if my assets don't get to where, you got to make sure you pronounce it, enunciate that, right? If my assets don't get to where it needs to go, my insurance will cover me if I die before my assets build up. But if I don't die before my assets build up, I'll have enough money where I won't be a financial burden on my son Zion or my grandson Romero, because they don't have to worry about how they're going to take care of dad and mom, because we have enough money. Our house to be paid off. We have well over $1 million in assets, and we can afford to pay somebody to take care of us in our own home, and not have to go to some cheap home and live in a little room, if that makes sense.
Yeah. So then M is mortgage and E is
mortgage, education for college. Absolutely.
Okay.
And mortgage. Now, if they don't have a mortgage, it's rent. Because no matter what, somebody gonna need a house to stay in. And some people don't believe in mortgages. Some people don't believe in rent. Some people say no, they can figure it out. So everybody's different. So I don't know what Shy would want. I would say, Shy, do you want your kids to have a house, or do you want them to have to go live with somebody else? And then based on what she says, would determine how much of that $5,000 or whatever amount of money she wants to invest that she can put towards an investment for a future. So before we talk about the future, we got to deal with the now. Does that make sense?
Yeah.
Hopefully I answer the question. I did a thumbs up, and a thumbs up popped up on my screen. Was that me? Or
yeah, that's that iPad. That's Apple.
That was kind of cool. Oh, wow. Yeah. Okay, look at me.
Yeah.
Technology.
I think if you put 2 thumbs, something else happens. I'm not on my Mac right now.
Let me see. Oh, okay. Okay, I'm for the special.
Celebrate that answer. All right.
Fireworks out. I didn't put that fire. I saw fireworks in my house, man.
I don't see any other questions in the chat, but okay. I was watching the Side Hustle Society last night, and Elijah.
Somebody just popped one. Somebody said new artwork. They love it.
Yeah. This is Elijah. I can never say his name like he says it. Bleal. He has like multiple YouTube channels, and I tuned into his podcast last night, and they were talking about it was a birthday bash, but they were talking about like ideas for him to talk about, because he talks a lot about side hustles.
Right.
So money, there's a lot of misunderstandings around money. Like the fact that a lot of people think the only way to make money is to have a job.
Right.
And there are so many more, like it's easier today than it's ever been to create wealth or make money. Like you can literally print money from your brain if you have a creative mind or you pair with someone that has a creative mind.
Right.
What are some ways, if people are looking to make more money so that they can afford the insurance, like they don't have to take their job's insurance, because insurance you get from your job is completely different than getting insurance on your own and getting your own personal financial advisor or CPA, right?
Right. Yes. And that's like a loaded question. That's a great question. So when it comes to insurance on the job, that's a thing called group insurance. And group insurance is amazing because they give you a nice little cheap rate. But I think it's like 80 to 90% or so of group insurance don't pay out because people change jobs so often. And the worst thing you can do is have all your insurance tied to your job, because you heard the saying, don't put all your eggs in
one basket.
So the thing about putting all your eggs in one basket, what's worse is when you put all your eggs in one basket and you don't even own the basket. So when you got your eggs, your 3 eggs, which I'm going to call the 3 biggest eggs, the most important eggs, is going to be, you know it, when you get a job, you go there for the first egg. Number 1 is income. You tell someone, hey man, I got an opportunity. You can make some money on if some people call it a side hustle, or I got a business opportunity. Oh no, I'm good, man. I got a good job. Okay, so this is a basket, right? And this is the basket. You like, oh man, I got a good job. Okay, and even who is it? Steve Jobs? Not Steve Jobs. Steve Jobs, does he own Apple? Not Steve Jobs he own Apple. But
Tim Cook now.
Yeah, but who's the one that owns Amazon? Jeff Bezos.
Jeff Bezos.
Jeff Bezos told somebody about a side hustle about selling used books. That's how Amazon started. He said, man, that sounds like a great idea for somebody who didn't already have a good job. And he said, man, it really made him think. So he thought about it. And then after he got back, he said, you know what? You're right. That is a good job for somebody who don't have a good job. So let me get rid of this good job. Anyway, he went into business for himself. And at one point, he was the richest man in the United States. So the second I people normally do, they had got their insurance tied to their job. Okay? I got insurance on the job. I'm good. Hey man, this kid's like, oh, y'all already good. My job got my insurance. Hey man, let me show you how to make some. Oh man, I'm good, man. My job is solid. I got job security. The third eye, which is the egg, I guess you draw these as eggs. The third egg is investments. I don't know if you ever heard of Enron, where people got all their money in stocks. Enron stock was looking at it, they were cooking their books. And I don't mean that's good, but they were cooking their books, lying about how good they were. And then boom, you lose your job, Enron. You can look at Toys R Us. Radio Shack, all these companies that went out of business. So you lose your job, they call you. There's people that got fired. I remember there's some people that got on Zoom, hundreds of people got on Zoom, and they get told on Zoom that you're fired. So instantly, your income's gone, your insurance is gone, and you're investing. So what if you had a heart attack while you was working a job because it was so cheap? And now you ain't got a job. Now you got to get your own insurance. Now you became a slave to your job because I got to keep my job, because if I lose my job, I'm going to lose my insurance. Now I'm uninsurable. That's the problem. So this should always be supplemental. The goal is to get to the point where everything you have at your job is supplemental to everything that you have. And that's how you get free from a job. So you ain't got to quit your job. But what if you found a career or a business where you can find something that can make half as much as you do on your job, so you don't have to work overtime or work holidays because you can afford to take off without pay? What if you got your own insurance? So the insurance should be supplemental. It should be extra. It should be the gravy on your steak, not the steak. It should be the icing to your cake, not the cake. Because I know people that got laid off, fired for no reason. And in Texas, you don't even have to have a reason. At will state, you can get fired at will, no will, or whatever will. So when you got all your stuff on your job, unless you have a contract where you cannot be fired or cannot be traded, Luka Doncic, and you know he was a Maverick one day, woke up, boom, he's a Laker. And that was Anthony Davis. Man, just won a championship with Lakers not too long ago. Boom, he's a Dallas Maverick. And when you don't own the company, you can be traded or dropped, whether you think it's fair or not. So that's what I would tell you to answer your question. You asked about insurance. So group insurance is never a good plan because you don't own it and you can't take it with you. And then when you leave a job, the only thing you can buy when you leave, it transfers in every state in the United States is a whole life insurance policy. So when you leave the group, it goes to whole life insurance, which is one of the most expensive type of insurance to buy. The good news is the agent that you buy it from makes the most commission and the company makes the most money, but unfortunately comes at the expense of the client. So there's three people involved in insurance. You got the client who pays the most for it. You have the agent who makes the most commissions from it, and then you have the company who makes the most profit from it. Whole life insurance, and the only thing worse than whole life insurance is IULs, which is the absolute worst type of whole life insurance. And if I can answer questions on that later, but the best type of insurance, which for the client to buy, is term insurance, which is going to cost you a fraction of the cost of this insurance. And then the money that they would have charged you over here, you can invest in a real account and get an IRA or an individual account, and you don't have to pay all those commissions to the agent that's trying to scare you into you can borrow money. I'm gonna teach you.
IRA is individual
retirement account, right? Or you can just get an individual account. It's just like a bank account, but it grows like an investment account. You can pull money out whenever you want, and there's no limitations on, you can't touch it before you're 59 and a half and all that stuff.
Okay.
So whole life insurance, term insurance, and IUL, none of those are investments. But if you're watching TikTok, you're watching these financial gurus, 9 times out of 10, if they're black, I can tell you this: if you're talking to a person selling insurance, there's about 275,000 licensed advisors in America. 76.5% are Caucasian. So out of all financial advisors, 76.5% are Caucasian. A little over 8% are Latino. A little over 8% are Asian Pacific Islander. But only 5% of financial advisors look like me. So a lot of these people telling you how to invest money, they don't even have an investment license. They're mentioning things like be your own bank, which is illegal. It's illegal to say that. It's illegal to market insurance as be your own bank.
And I had somebody forcing that down my throat last year, like trying to get me to sign up for this Index Universal Life.
Oh yeah.
Put all this money in the account and then borrow on it and go. I was like, man, the fact that you're pressuring me on this, lets me know there's something wrong with that. Like, what
were they gonna charge you? What were they gonna charge you for that? Do you remember?
Didn't even go that far.
Okay.
Well, I was like, man, the energy they were giving off trying to get me to sign no, absolutely not. It just sounds illegal. That sounds like an Enron scheme, right?
Right, exactly. I'll tell you this: with term insurance, and this is all insurance companies. With term insurance, your agent only gets paid one time that year. With whole life insurance, variable life insurance, we got whole life, variable life. We got your wife and IULs. They all pay you commissions for the rest of that client's life. So every time you make a payment, your agent gets a commissions check.
Oh,
and it costs you 10 times more money. So why would an agent want to sell you something that costs you 10 times more? So if they're trying, like I know one client personally I helped, her friend did this to them. I'm gonna say them so you all know what gender. I'm not saying them or they, But this person was being charged $5,000 a month for a $3.9 million IUL, right? She was paying for $3.9 million. This person was being charged by a friend $5,000 a month. If you do the math, that's $60K a year. And it's all on the contract. We called the phone and I said, hey, listen. She said, they said, hey, listen, I can borrow the money. So when you're looking at borrowing money, when you borrow, that means you don't own it.
Right.
Just keep that in mind. Borrow. So when you borrow, you go into debt. So being your own bank, they told her, look, you can get some money and you can borrow it. And what they did not tell them is that when you borrow that money out, after about 21 years of paying $60,000 a year, they would have given them probably like 1.8 million they paid into it. The highest the account ever gotten was 432,000. After year 21, the cash value that they promised went down. By year 30, the cash value went all the way down to 6,500. By year 31, the cash value was at zero, and the death benefit of 3.9 million was at zero. But they still charge this person $60,000 a year for a guaranteed zero death benefit and a guaranteed zero cash value.
How is that legal?
See, here's the thing. How is that legal? It's because they signed it. So it doesn't matter what I say. It doesn't matter what your agents say. What matters is what you sign. So it doesn't matter how pretty they make it sound. Oh, you can get the sky and the pie and the ocean and the rivers. That's what they said, but what did you sign? So this person, at the end of the day, after keeping this policy to their 120, would have given that company it adds it up for them, which is funny. I didn't have to add it. It was actually on the contract. They would have given that company $4.8 million, all to be guaranteed zero death benefit and get zero cash value. And when I called them on the line, I asked them, I said, sir, can I ask you a question? He said, yes. And I pretended to be the son. So they were talking to me like I'm done. I said, hey, let me ask you a question. Like, this is my mom. I said, how would you feel if somebody sold your mom something like this? He said, I'm sorry, sir, we're not allowed to answer that question. I said, what do you mean? I said, how would you feel if your mom would have paid $4.8 million policy and it guarantees already nothing at the end? He said, I'm sorry, sir, we're not answering personal question. So you can't tell me, do you think that's fair? No, we're not allowed to answer that. I said, well, I said, no problem, sir. You answered the question already. So I was able to get this person, instead of paying $5,000 a month for 3.9, we was able to get this person over $5 million worth of coverage for $3,000 a month less. And if you just do the math, $3,000 a month times 12, we saved this client $36K a year. And after 30 years, their cash value, I said, was $6,500. In 30 years, the savings alone was $1,080,000. And that's with no investments. That's just strictly just put it under your pillow. And then I said, hey, even because I have a license, if you just invested that money you was giving to that agent, and just let you know that out of that $60,000, that agent made about 30 to about 45K in commissions off of selling that. And then they get paid every year that you keep paying it. I said, listen, if you take the $3,000 saving, you invest instead of putting it in your pillow, instead of having $1,080,000, you have about 6.1 million if you just average 10%. And we had accounts that have been averaging over 10% since 1948 that I showed them. And the only question they asked me is, how fast can you get me out of this? But what you don't know can't hurt you until you meet Paul Franks, right?
Man. That's a mic drop moment right there. Wow.
Absolutely.
And you've shown me this before, but like, there's something about you talking, because you talk fast, and you writing on this whiteboard that's making things hit completely different.
Right. So check this out. What really was bad, if I would have talked to this person like 2 or 3 years later, let's say this person would have had a heart attack, they would have been stuck in this, paying $60,000 a year for a guaranteed zero death benefit. I would have put hands on somebody if they did that to my mom. And unfortunately, that did happen to my mom, but I don't know the person that did it. And that's when my mom passed away. All those policies she had got ate up just like this person. And so when she passed away, my mom, we got nothing but a bill. Our people perish for the lack of knowledge. So there's about, it's 365 days in a year, Greg. And there's 345 GoFundMe's on average being created every single day, begging for money for you to help pay for a funeral. You can go look on GoFundMe right now. It's over 10,000 new GoFundMe started every year. You divide that by 365 days. That's how you come out with the 345. Little problem or a huge problem?
That is a huge problem.
And the answer is always, I thought my husband had it. Oh, my husband handles all the bills. And then a lot of people don't realize, oh, we got insurance. If you don't know how the insurance works, you can be married, looking all happy. Your husband can have a side chick, and then all of a sudden your husband changes yes, this happens. Husband changes the beneficiary to his side chick. Wife changes the beneficiaries to the kids and don't tell the husband. And the kids don't even talk to the husband because they might have a mixed marriage. So now husband been paying the bill, the wife called in, changes the beneficiary, and don't even tell, or vice versa. A lot of vindictive stuff happened during the end of life. So this is why it's important. If you're married and you're listening to me, you don't need no surprises when your husband passes away. You should know exactly what your husband has in life insurance. Your wife should know exactly what you have. She should know exactly what you go to. Because when you pass away, a lot of times your bank accounts get locked up and the payments don't go through. And your policy lapses for lack of payment, but you didn't know he even had it. You didn't know where to go. And you can't change it because you're not on it. So that's why if you're the beneficiary, make sure you are put down as a irrevocable beneficiary. And I'm gonna give you this nugget here. Why would I want to be irrevocable? I trust him. Okay, yeah, you trust him now. What happens when you get a divorce? And then you have a heart attack? You can't get insurance nowhere else, but he won't let you come off of that policy because he said, I've been paying it for all these years, and he switched the beneficiary to his new wife. She changed the new beneficiary to a new husband, and you've been paying it for 40 years. So you need to make sure you have yourself down as an irrevocable beneficiary, because it can't just be changed by the kids or the wife or the husband. And if you're married to a death do us part, why would it be a problem to be an irrevocable beneficiary unless you got something, and I know that's probably not a fun topic, but if you're married and you got kids with each other and you buy a policy, both a husband and wife should be irrevocable beneficiaries. Anybody got a problem with that? That's like a prenup. Like, I'm not getting this policy if you can just change it when we get a divorce. I'm not getting this policy because my health is going to change. And it's very, very important. I need to share this. I'm going to share this about the theory of decreasing health and reward. And this is going to save somebody. I can't tell you, I got clients that done this. It's sad. This is important. Right here is your health and your insurability.
Man.
This is why your insurance goes up, Greg, and mine. This right here is the cost. Okay? So this is the cost. So right here, health, cost, and sacrifice. No, that's cost. So this is the cost. So when you're buying insurance, you're healthy when you're younger. So let's say you're in your 20s. And let's say you've been married from 20 to, let's say you're about 50 here. And let's say you're about 75 here.
Okay.
And you're buying the insurance right here. Then boom, you get a divorce at 50. You get a divorce at 50. But over here somewhere, you didn't have a heart attack. You and your husband not talking. You and your wife not talking. She cheated on you. He cheated on you. Whatever. And you already got a policy for $500,000. But you got it when you was 20. And then you had guaranteed insurability. But since y'all divorced, the husband or wife is paying for it, and y'all on there together. And only way you can get insurance, you need to take that policy with you. But he won't let it go. She won't let it go. What do? There's no law that can force your husband to make you the beneficiary of his policy if you didn't have it on there first. So y'all can get mad, and then guess what? He get married to another woman at 52, dies at 54. Y'all been paying from 20 to 50, and shows he got a new wife. New wife only been married for 2 years. She gets the $500,000, and the ex-wife gets a bill. Is that fair? The ex-husband gets a bill. He been paying for the insurance. I know husbands that paid this shit for 35 years, and the wife changes to the boyfriend. I can't call the husband and say, "Hey, ex-husband, hey, your wife I can't." It's against the law. I can't call and say that. So you owe it to yourself. If you have life insurance, you need to know not just how much, because you need to be notified. So if your husband lowers the cover, or what if he missed a payment? What if he had a brain fart and forgot to pay it? And now your policy lapsed. Both y'all got heart problems. Now you can't get it back because you waited 31 days to pay it. And now they got to go get you. You got to go get checked to see if you're still healthy. You had a heart attack. You got cancer. You had a stroke. Now you can't get the insurance, all because your husband forgot y'all changed bank accounts. You know anybody ever change bank accounts?
Oh, yeah.
You ever heard of a bank thinking it's a fake draft and they cancel it? Ain't got nothing to do with the insurance company with. If you don't pay after 31-day grace period is up, they can cancel you and they ain't got to reinsure you. Especially if they find out you had a heart attack, you're a super high risk now. So that's a nugget. Irrevocable beneficiary, husband and wife. Does that make sense, or do I need to explain it a different
No,
way?
that makes perfect sense. I didn't even know that was a thing. Like,
Yeah. It is a thing, cause.
so the first time I ever actually went through, because I've had, I can't tell you how many people have approached me with multi-level marketing, finance this, be your own bank that, you know, your personality kind of tends to attract people to
Right.
get you to sell things. And I can never, the reason I've never been in sales long term is
Right.
because the moment I find out there's something I can't get behind or there's something shady about what
Right.
we're selling,
Right.
I'm gone. Like
Right.
I can't in good conscience sell you something that I know is wrong.
Right. That's
You're the
called
first
morals and character.
person, huh?
That's called morals and character. The high morals and character. Thank you.
There we go.
I wouldn't be doing this call with you if you wasn't like that. So yeah.
Thank you. So you're the first person that actually got me to be interested in finances, period, because of the way you break it down. And I know we tried to get me insured. Now, I don't know if I was denied because of my age, because of my history, or because of, you know, already having insurance on my job at the time and they saw that in the system or whatever it was.
Right.
I'm sitting here like, okay, now I have to create income so that I don't have to, like, so I can create investments to take care of myself. So I won't say I have to. I get to take care of my health.
That's good.
I get to create wealth.
Mm-hmm.
I get to do it a different way. But for those that like are blowing money on subscriptions, blowing money on eating out, Uber Eats, DoorDash, like the inflation on, like, have you ever checked? That's a rabbit hole I won't go down. Let's just say they change the prices that are on the actual menu when you order in DoorDash, and there's just fee on top of fee.
Yeah. I do notice
the driver does not get that.
Right. It costs more to buy it on DoorDash than to go there yourself. They adding fees, making it seem like it's the price menu, and it's not. Yeah.
So help me out. Help someone not fall into the position I fell into so that they can prepare their future better than I did. Because I messed up, right? I put myself in a position where I have no other option but to create wealth.
Mm-hmm.
And like, there's no option for health insurance for me now. Right. So help someone not fall into that position for me. Like how do they reroute the money they waste so that they can actually prepare their family, their future, so that they don't have to struggle?
Okay. First thing, just understand it's going to be painful no matter which way you go. You're going to deal with the pain of regret. Like right now you have regret. Oh, I wish I would have did. I wish, shoulda, coulda, woulda. There's nothing you can do about this. So stop beating yourself up about that. You did the best you could with the knowledge that you had. Now that you've been equipped with more knowledge, you said, man, if I only knew. Hey, if I got $1 for every time I said that for myself, I'll be a billionaire already. So all we can do is, they say, Maya Angelou said, if you know better, you do better. I disagree. I say, if you know better, you have an opportunity to do better. But some people know better than still, they're going to do it anyway. So I can give all the information what to do. Some people are not going to do it. But the first thing you need to do before you pay for a luxury, make sure you take care of your necessity. Meaning most people will buy what they want, then they beg, bum, and borrow what they need. I say it this way. You can't look at me on a $1,500 cell phone that you paid $1,000. I don't care even if you're making payments, same thing. If you paid $100, $500, $1,000 for a cell phone, you can't talk to me on a smartphone and tell me you can't afford life insurance. You don't want to afford life insurance. It's not a priority. And I know that may not feel fun, but it's okay. Some people just don't feel like their kids or their wife or their husband is worth $100, $200, $300 to leave them some money. There's 3 things I can't fix, Greg. I can't fix selfish, I can't fix stupid, and I can't fix stubborn. Now, what I mean by selfish is, if you're sitting here thinking, well, when I die, I don't want my husband all wrapped up with another woman. How are you going to be dead and jealous at the same time? Well, I've been doing this for the last 50 years. Okay, so you've been being beat by your husband for 50 years. And there's another man here that's going to take care of you. And since you're going to say, well, I've been being beat for 50 years, what's another 20 years? There's some people, even though they've been being beat by the wrong insurance, they won't change because they're stubborn. That's fine. People have a right to be selfish. People have a right to be stubborn. people have a right to be stupid. Hey, you're paying $5,000 a month. I've talked to people that's paying $3,000 a month, and they're pouring $100,000 on top of it because their friend said they can borrow money. And I'm sitting there telling them, I'm showing it to them. I called them, they got them, and they still chose to stay. So understand this when I say this. Whole life insurance, IULs, variable life insurance, they're perfect for people that don't want to listen. Perfect for people that don't want to grow. Because I used to think those things should be illegal. No, it should be for those who refuse to listen, who think they know everything. Because I know I don't know everything. But this right here, how to save yourself, you first got to admit that you don't know it all. Second of all, you have to forgive yourself for the mistakes you made. You did the best you could with what you have. So what you got to look at, if you got Disney Plus, you got FedEx, whatever you're doing, if you're an Amazonaholic like me and my wife, you need to cut that off until you get your bare necessities in. Because if you do not have life insurance, and let's talk about the foundation. Let me show you. Can I get past this? Let me explain this real quick. Your health and your insurability is highest when you're younger, but when you get older, Greg, you become uninsurable, either through age or your health went bad. But the cost for insurance, the later you wait to get the insurance, but when you were born, you were healthy. If your parents would have put insurance on you as a baby, you would have had the insurability your whole life. But some parents wait until their grandma about to die, then they want to buy insurance. I have people call me, hey, my mom is 99 years old. Can I get some insurance on her? No.
It's like trying to insure your car when it's got 900,000 miles on it.
No, what's worse is when people you totaled your car and now you want to put car insurance. So people call me when their grandma or grandfather is in the deathbed. They got 2 weeks to live. Hey, can I put insurance on my grandpa? What? Yeah, he's on ICU. He's in ICU. No, I cannot. What about those insurance companies that says guaranteed insurability? Yeah, go read the fine print. It don't. If they die in the first 1 year, they just give you a refund of your money. And then after the 2 or 3 years, they pay you 10% or 20%. It's different for every company. Yeah. Anybody that'll give you $2 million guaranteed without a physical, very fishy. Okay. Anyway, So the cost, the later you wait, like you got now, and you have later. If you buy the insurance now, it's always going to be cheaper than if you buy it later. But the thing about it is, you're not guaranteed to be insurable now. You're not guaranteed to be insurable later. So that's why you always got to get insurance first. Why first? It's the foundation to any investment plan. So the first thing I would tell you is this is how, can you see this drawing here?
I can.
This is how most people build their house. How I built my house before I got trained. The first thing they do is, number one, this is the bad way to build your house. They call this income management. I'll talk to somebody and say, hey, we need to get you some insurance to protect your family. Oh, wait a minute, man. I just got a new job. Me and my wife got a new more house. Let's see how our bills are first. And after we pay our bills, get it all managed, then we'll call you, Mr. Franks. Cool. Hey, something can happen. Oh, yeah, but we young, we healthy, we real safe. We don't do nothing dumb. We don't drink and drive. We don't do none of that foolish stuff. We don't hang out of airplanes. And okay, but I said, sir, you could die from natural causes, or somebody can do something. Oh, I'll get back with you. So the second thing they do is, I know we need some insurance, but man, we got some debt. So they'll sit here and say, we got a lot of debt. We need to pay this debt off. So they got debt elimination. Or they'll do, I'll say this, they'll probably do savings. Really, I need to save some money because I gotta protect myself. Savings, retirement. The next thing they think about, I got some debt I need to get rid of. Debt elimination. Now, once I get my savings, get my retirement. So step 2, they want to manage their money, then get a nice little savings for, most people spend more time planning a 2-week vacation than they do a 30 to 40 year retirement. Like literally, and I would say not even 2-week vacation. Most people spend more time planning a 1-week vacation than they do a 20 to 30 year retirement. It's very sad. And that's all races included. It's not just people that look like me. So first step they do, they want to manage their money, get their budget together. Let me check my budget. Like with me, my wife and I, we don't check our budget for tithes and offering. Tithes and offering is part of it. So we're going to pay our tithes and we're going to budget everything else. We're not budgeting our tithes. That's the foundation. Number 2, let's get a little savings, get a little retirement. Then let's knock out some debt. Then we're going to go and get some income protection, we call it, because that's what life insurance, it protects the income that you lose when you die. That's how most people, life insurance is the last thing on their mind.
Right.
Now, here's the problem. If you start your house off like this, Greg, and you die in step 1, what happens? So if you die in step 1, what happens?
You leave behind the debt.
So you have no income. So you have no income now. Family got no income.
Yeah.
How much savings do they have?
None.
No savings. How much retirement they got?
None.
How much debt do they have? 100%.
Probably a month.
Plus a $10,000 funeral. And how much income is protected?
None.
So if I took this same family and I built a house and say, hey, this is the proper way to build your house. So I know you may not be able to buy what you need. Let's step one, we're gonna do income protection. We're gonna flip it upside down.
Mm-hmm.
We're gonna do income protection. We're gonna buy you a $500,000 foundation to $1 million. Okay. Well, I don't have enough money to do the other stuff, but let's start here. We're gonna do the income protection. So if you die before we do steps 2, 3, and 4, your family's still gonna be okay. Now, next step is let's put a plan together. Not all your money. Let's put a debt elimination plan together. Because when we start knocking out some of your debt, the more money we're gonna have to put into your what?
Savings
and what?
And retirement.
Then last thing you need to be focused on, and after you do all that, let's focus on income management, which very few people ever get to. But what do you mean, Paul? What if you die in step 1 right here? Okay, great. I'm so glad you asked. Great question. So if you die in step 1, just like you die in step 1 here, now you got $500,000 to $1 million cash. Now you can wipe out your debt. You got money to put in your savings and retirement, and you got some freaking money left over to what? Manage.
And drop the mic right there. Paul, thank you so much for coming on and answering these questions. I know we didn't have a lot live, but this is the most engagement I've ever gotten on one of these podcasts.
Mm-hmm.
And it's because you're dropping value that everyone needs, right?
Right.
The number one thing people struggle with is money.
Right.
And if
number one destroyer of marriages is dealing with money.
A destroyer of anything. Like
fights, murder, all of that.
All of it. You know, there's always been this thing in the back of my mind that's kept me from getting insurance that probably cost me my entire insurability, right? Was if I get an insurance policy and I'm with the wrong person and they find out I have $1 million life insurance policy and they get mad at me, they could just kill me and have $1 million and then I'm gone, they're rich, and I'm not paying.
You've been watching Snap too long.
Man.
My wife watches that all the time, makes me worry. I say, why are you watching Snap? You trying to learn how to get away with it? What's going on here? But she's fascinated about that stuff.
My wife watches those lawyer crime shows. I got wrapped up in Blacklist for 10 seasons. I don't even watch Netflix. I don't watch TV, but I was so wrapped up because it was just mind-blowing. Speaking of mind-blowing, Paul, this has been mind-blowing to have you on here and explain all of this, and I'm so glad you brought your flip chart. It's something about the power of seeing it visually. You got me wanting to change how I teach now.
This is the first time I ever done it. I did this just for you, so I hope you feel special. I know,
man, I do feel special, actually. And I hope everybody watching feels special, whether you're watching it live, thank you for tuning in, or you're watching it on the replay. Tiffany's laughing at us.
What's going on, Tiffany? Tiffany Outlaw, the wife, the Mrs. How you doing?
This is, yes. She is doing lovely. I'm glad she tuned in for the whole thing as well. Paul.
Yes, sir.
If they want to work with you, you know, how do they get in touch with you? How do they work with you as a financial advisor?
Well, first of all, I want to thank anybody that stayed on this call. And I want to tell you my zero story real quick, because I don't want you to think that I come from money, and I don't want you to think I come from knowing it all. I graduated from Jack Yates in 1999 with a PhD, public high school diploma. My parents told me to get a real job. Don't do this. Nobody's going to pay you 6 figures doing this. Thank God nobody believed, even though nobody believed in me, including me. But I took a chance anyway. So I want you to know, even if you don't believe in yourself like I didn't, you can still win here. So to get a hold of me, you can go to One Paul That's All. When I say One Paul That's All, not one because somebody stole that when I was mad. Because it's one like I won, one Paul, like Apostle Paul in the Bible. That's all. You can contact me on there if you're serious about an opportunity. I have about 60 licensed agents across the country, here in Virginia, California, Texas, and a lot in Mississippi. You can work remotely. You can get your life license. Our company will sponsor 95% of the cost, but you do have to have a clear background, and you need to be a man or woman of character. We don't just accept anybody. We want the best, and you don't have to have a skill set to sell. We don't care about that. If you love people and you care about your future, we have a place for you. But if you don't like people, and I mean people that don't look like you, we won't work with you, because we're not here just to help black people or white people. We want to help the right people. Okay, so I'm looking for people who believes that they deserve more than what their jobs is paying them, but also they don't want to leave their family broke, busted in disgusted, broke as a joke and ready to choke when they die. My mom and dad both left us all their bills. My mother paid for insurance for over 30 years, but she chose the wrong thing. And what they tell you, and one of the biggest lies you hear, Greg, is what you don't know can't hurt you. And that's a lie. So I'm looking at people that want to help themselves. I will help you so you can help somebody else. And that's how I came in. I was a client for 2 years before I got into this industry.
Wow.
Because I didn't believe nobody would listen to me. So I heard about it when I was 25, and I listened to my parents tell me I couldn't do it. Then it came back around when I was 27, and I said, let me take a chance. And I said, worst case scenario, if I fail, I can always go back to school, get into debt, and go get a job and be just like everybody else. Because jobs are always hiring, you know? And that's no knock on people that got a job. I worked a job majority of my life, but I wanted to know if there was another way where I could be the person sitting on the other side of the desk. Because I hate that feeling, will they choose me, pick me kind of feeling. I hate that.
Right. Yeah. And I don't like filling out applications.
Right.
Side Hustle Society said, glad to see there's administrative topics covered. So often people just focus on making more money instead of putting things like this in place, especially insurance.
Right. Insurance is a non-letter cuss word, and that's one of the biggest ways to transfer assets. And I just want to say this again. I didn't have time to go into that. If we have another call, I can talk about it. It's called BTID. I kind of described how it helps somebody that teaches by term invest differently. I don't care if you're black. I don't care if you're white. I don't care if you're Chinese. I don't care if you're Asian, Pacific. I don't care what you are. It's not race related. It's not wealth related. Term insurance is 100% best for the client. So when people ask you which is the best insurance, that's not a proper question. The question you should ask is which insurance is best for me to buy?
Yeah.
And it's term insurance. But the best insurance for me to sell as an agent is IULs. It's the highest commission. I'm going to take home whatever you're paying a month, multiply times 12. That's what your agent is making times whatever you're making paying a year. They're getting 70, 80% of that every year or more. Term insurance, they may get 50% of it the first year, and that's it. It's like buying a house, and that's it. When you buy IUL, they're getting paid like rent. You'll never own it. Like they say, be your own bank. Yeah, you're getting played. And I can show it to you. If you call me, I can show it to you. And a matter of fact, I say this all the time. You show me your favorite steak dinner. If you show me an IUL I can't beat, dinner's on me. I ain't bought a dinner yet. But my dinners have been paid for. So I don't care if your pastor sold it to you. Now, and even if Jesus sold it to you, IULs are trash, but Jesus wouldn't do that to you.
Wow, man. I just dropped your I don't know, what do you call that? Your tag at work.
Yeah.
That's all. Reach out to me. I'll put you in touch with them. This has been golden, literally. Thank you for tuning into the Greater University, sponsored by Question Everything. Man, let's drop the mic right there. And if you want to see more, if you want to learn more, we've got plenty more to talk about. I mean, this is just scratching the surface of the iceberg. So until next time, be strong and courageous. Do everything that you do with passion. I promise you will have a life that you love. I should have been on my back, man.
I had to. I couldn't help myself. All right. Thanks, Tiffany, for staying on the whole time. Thanks, Greg, for the invite.
Thank you, everybody, for tuning in. We'll see y'all tomorrow when I interview Marissa Acosta about grief and how to get over that.
Wow.
Yeah.
Okay. Well, you have a good one, man. Love the background and everything. I got to get my background game up.
Hey, I'll make one for you.
Yes, sir.